What's going on, my fellow wealth creators? Matty Ice here. I am really excited to do this video because we are going to break down the numbers for my second real estate private money deal, which closed about 3 weeks ago. I've just been kind of busy, so I'm just finally getting around to doing the video here. But I've been very excited to share this with you guys because this is such a fantastic way to build wealth and put money to work, especially if you're an entrepreneur or you're just busy in general and you don't really have the time to do, wholesaling or fix and flips, acquire rental properties, whatever. But you still want to invest. You still have some money that you want to put to work, and you want to put it into real estate. Just not really sure how. This can be a great way to do it because we are essentially acting like the bank here. Now, we're not going to make as much money as our investor might, at least mine, anyways. They make tens of thousands of dollars when they do a fix and flip deal, which is great. I want them to be very profitable. I don't make nearly as much as they do, but that's okay because I'm also not putting all the time and effort in that they do. Right? I'm still working on my business and focusing on other things, but I have my money at work earning great returns. You can make really good returns with this, especially when you combine it with the infinite banking concept. So we are going to talk about all of that. We're going to break down all the numbers. Let's have some fun. But before we get started, if you guys don't mind, if you find the video helpful, if you do me a solid, just hit that like button. It really does help. Consider subscribing because I come out with these types of videos all the time, just sharing my wealth building journey with you guys and what is working for me. Would greatly appreciate it. Let's go ahead and dive into it. All right. First things first, I just want to show you that I actually did this deal, show you one of the documents involved with the process. This was the actual mortgage that was filed with the county. All right, this is my LLC right here, MWC Investment Group. Take a wild guess at what MWC stands for, Millennial Wealth Creator. Okay, so that is my LLC. Just for any doubters out there, lent $115,000 on the property, et cetera, et cetera. So this was the actual mortgage that was filed with the county. All right, and this is a very important document, which we're going to get into here in a moment, that makes lending out $115,000 a lot less risky, right? Because that's a lot of money. So we want to make sure our money is secured, and we'll talk about that. All right, but that is the actual mortgage. And then you know what? I'm kind of jumping ahead a little bit here, but I just want to show you that this was a real deal that I did. All right, and here's the date. This is a screenshot from my bank account receiving the wire transfer once the deal was completed. It's definitely a fantastic deposit to see when you're logged into your account. It's awesome. But June 18th, 2025, $123,031.10 is what I received back. So I lent out $115,000. Received $123,000 back. All right, let's get into the actual numbers and the deal breakdown. So I am a huge fan of infinite banking, guys. I think it is one of the most powerful financial strategies out there. It allows us to establish our own private banking system, build wealth in multiple layers, and we just get so many benefits from it when you do it right. It is freaking awesome. I'll link to a couple of different videos down below in the description. If you want to learn more about that, I have a free infinite banking masterclass as well that you can check out. But I have videos where I break down the structure and design of my policies and all that. They're really, really powerful when you do it right. And essentially, with infinite banking, we are using custom designed, high cash value, dividend paying whole life insurance to do something like this. All right, this is just what I'm doing in my life, guys, and it's working extremely well. All right, but we use these dividend paying whole life policies to establish a strong financial foundation. But because of the nature of whole life insurance with cash value, which is essentially the equity in the policy, we're able to get liquidity. We're able to access that cash, that money, without interrupting the without interrupting the tax-free compound growth that these policies get, which typically they'll net around 4, maybe 4.5%, give or take, which is really good for a safe vehicle. But it's not locked up. I can take a policy loan against it, and lend it out at a much higher interest rate than what it cost me to borrow from. And that's exactly what I did here. So I borrowed $115,000 from my private banking system, which is essentially what we established with these high cash value, custom design, dividend paying whole life policies. Okay, so I borrowed $115,000 at 6%. All right, so because we're using the life insurance company's money, and this is a policy loan that we're taking in order to implement infinite banking so that we can lend on the real estate deal, right? There is going to be an interest cost, right? But it's absolutely worth it. It's peanuts compared to what we're going to make here, all right? And also because we're earning money twice here, we're getting the uninterrupted tax-free compound growth in the policy, and then I lend it out at 13%, basically annually, plus 1 point. Okay, we'll get to that in a second. But I essentially borrowed from my policies, lent it to an investor for a fix and flip deal in Panama City, Florida, which is another great thing about private money lending, is you're not geographically restricted to where you can do deals. If you meet an investor that does deals all across the country and he's really good at what he does and has a great track record, has never defaulted, you can do deals anywhere. It doesn't matter. That's the beauty of this, right? But he needed money for a fix and flip deal, and we secured it by that first lien position mortgage, which is what I just showed you right here. This is what significantly reduces the risk when you're lending this amount of money. When you're lending, I mean, this is a lot of money, okay? When we do that, though, well, since it's a lot of money, we want to make sure our money is protected, our investment is secured, right? Well, because we're lending on real estate, which is a hard asset, I could take possession of it just like a bank would if you didn't pay the mortgage on your house. Like, that's exactly how banks are able to comfortably provide so much money, lend so much money to people to buy a house, hundreds of thousands of dollars, because that money is secured by the property. And if the borrower defaults, the lender can foreclose on the property, take possession of it, sell it, and recoup their investment. We are doing the same exact thing here, which is why private money lending, when you understand what you're doing and you work with the right investor, is actually very low risk because it's secured by a hard asset. So in the event that the deal goes south, you can foreclose on the property, sell it, recoup your money. That's the idea. Now, obviously, we don't want that to happen. That's the absolute worst case scenario. But there's a lot of peace of mind knowing that your money is secured by a hard asset in case something does happen. And of course, there's insurance and all that other stuff too. All right, but that first lien position mortgage is huge when it comes to securing your investment. So that's why also, guys, I'm such a huge advocate of educating yourself, like just doing your own research. Like, I literally spent 6 months learning how to be a private money lender before I even looked at my first deal. I went through the same course like 7 times, I think, before I even started looking at deals. Just learning the terminology, the language, the contracts, how to increase profit, how to reduce risk, like just everything that you need to know, okay? So make sure you educate yourself first before you even think about lending money to an investor, okay? You have to know what you're doing. All right, with that said, I'll link to the exact course that I went through and still go through. I go through it like once a quarter just to refresh my memory and learn more. All right, there's a 10% discount code as well because I am an affiliate for them. It is a phenomenal program, guys. Well worth the investment. It's pretty cheap. More than recoup your investment in that course on your first private money deal. But anyways, back to the numbers. So the deal breakdown was $85,000 for the purchase, $30,000 for repairs. It didn't actually need that much in repairs, but my investor just he borrows more than what he thinks he's going to need just in case, because things do come up in real estate, unexpected repairs and issues, etc. So instead of having to go back to his lenders to get more money, he borrows more than what he believes he needs, all right, just in case, right, as a little cushion. All right, so I borrowed at 60%. I lent it to my investor at 13% plus a point. Now tell me, why on earth would I not do that over and over and over again? And meanwhile, remember, my money is still growing uninterrupted, tax-free in my policies at roughly around 4% for the life of the policy, okay? So I have the safe asset that's getting uninterrupted tax-free compound growth, and now I'm making it's an 8% positive spread here on this deal, because 1 point, that's 1% of the total loan amount. 13% is done annually. It depends on and like how much interest the borrower pays is dependent on how many days that the loan is outstanding. We'll break that down in a second. All right, but borrow at 6, lend at 13 plus 1 point. Why on earth wouldn't I do that over and over and over again? Well, I am. This is exactly what the banks do, guys. When they pay us 1%, for example, on our savings account or a CD or whatever it is. I mean, it's kind of, they're higher right now, but historically speaking, they pay very little, okay? But then they lend it back to us at 4 or 5% to buy the car or the house or whatever. That's exactly what they're doing. We're just replicating the process here. That's why when you set these policies up right for infinite banking, you're essentially setting up your own private banking system here. All right, so I'm paying 6% to the life insurance company to use their money, so I get uninterrupted compound growth, but then I lend the same dollars out at 13% plus a point. That's freaking awesome. All right, this was a 6-month term. Basically what that means is that I'm saying you can have my money for 6 months, but if you end up needing it longer than that, if the deal takes longer than anticipated, then I reserve the right to charge additional points for that extension. All right, but this deal took about 5 months to complete. It was about 5.5, give or take. And then my first deal with the same investor, because I'm working with the same investor in these deals, the first one took about 4 months. All right, that's pretty typical. 4 to 6 months for a fix and flip deal. That's pretty standard. All right, and this was a lump sum payoff, meaning I was not charging interest. Like I didn't require those monthly interest payments. Usually, like a lot of the times, private money lenders will require monthly interest payments so that they start getting paid their interest right away. I don't do that. I don't need the cash flow for it right now. It's also a lot of extra work for my investor, my particular investor anyways, because he has lots of lenders that he works with. He does dozens of deals every single month. And that's just a lot of extra work that he doesn't really want to do. I don't blame him, especially since he has a really good track record. He's never defaulted. He's a very successful real estate investor. He doesn't have to do that. So I am totally fine with doing a lump sum payoff once they sell the property and it's closed. But you don't have to do that. You could require monthly interest payments to get a little bit more skin in the game right up front. It just depends on the investor that you're working with and your like how you want to structure the deal. Because remember, you're the bank here. You make the terms. All right. Like I said, it's located in Panama City, Florida. Already mentioned that. You could do these deals pretty much anywhere. It's freaking awesome. All right. So I received back $123,031.10. That was the wire deposit right there. Okay. Gross profit, $8,031.10. All right. Now I say gross profit because remember, I took a policy loan against my private banking system. $2,875. That's roughly what I paid for the policy loan interest on the deal. Okay, so minus that, my total net profit was $5,156. That translates to roughly about $1,000 per month of passive income. I will take that all day long. That's pretty sweet. Like, how many rental properties would you need to own? How many tenants would you have to deal with on a regular basis in order to generate the same return? I didn't have to deal with any of that. I was just waiting for my investor to get done with the deal, and boom, here's the net profit, right? And now we do the same thing over and over again. We do another deal, right? So again, fantastic. I'm just trying to emphasize this benefit, this fantastic benefit of the passive nature of doing private money lending. It is freaking awesome. All right. This also doesn't include, this net profit here doesn't include what my policy grew by. Remember, we're earning money twice here. This is, I basically printed this because I didn't use my own money for this, while my policies were getting that uninterrupted tax-free compound growth. So we earned money twice. I've just never heard a very good argument against this. I'm going to do this over and over and over again. All right, total actual return was 179%. How did I get that? Well, when we take our net profit and we divide it by our actual cost, which was not $115,000, guys. I can't stress this enough. All right, I want to reiterate this. I did not use my own money. Because I took the policy loan, I used the life insurance company's money. So now we're introducing leverage into the process that's going to significantly increase our rate of return here. So my net profit divided by my cost, which was $28.75, 179%. Need I say more? It's really powerful. Now, here's the thing, guys. You don't have to implement infinite banking with private money lending. It's totally up to you. Everybody's different. I think it's a no-brainer, but it's certainly not for everybody, and I understand that. Regardless, private money lending, fantastic way to put money to work and invest in real estate. If you're looking for to generate that passive income, you want to get involved in real estate, but you don't want to do the fix and flips and manage contractors, do the repairs, etc. Private money lending, definitely something to consider. So, like I said, I will link to the exact course that I went through that taught me everything that I know and got that I know about private money lending right now and got me ready to do my first deal. I will link that down below with a discount code. Make sure you guys check it out. It is fantastic. I can't recommend it enough. But yeah, I'll go ahead and wrap up with that, guys. I hope this was helpful. I was just excited to share my progress with this. And like I said, the point of a big part of this channel is just to share my wealth building journey with you guys. Hopefully give you some ideas of different things that you could start to implement, because this stuff works really, really well when you understand it, you do it right, and you start implementing it. So I hope you guys are crushing it. I will talk to you in the next one. To your success. Matty Ice is out.